Hey everyone, it's Shauna the Tax Goddess, and today I'm here with one of my favorite experts, the very handsome Mr. Chris. Chris is the head of a company named PMBA.
We've got this toolbox of resources that we could rely on. And let me give you a few of our secrets, although I don't want to give them all away. First of all, when you owe tax to another state for sales tax, the state can only tax one person on that transaction ultimately. Now, it doesn't mean that they won't try to tax the buyer and the seller, but only that tax only has to be paid once. So when it comes to sales tax liabilities, we do a couple things we call liability mitigation, where we go through your business and say, okay, company ABC, before we tell you you owe $100,000 to New York State, let's reach out to your client and see if they were audited already by New York State. Because if they were audited, you don't owe the money. Even if they didn't pay it under audit, as long as they were audited, you don't owe the money. That's really a nice little, obviously.
Yeah, for loopholes. We love it.
Exactly. It's a great loophole. Also, when it comes to sales tax, somebody may have self-assessed sales tax. Some of you out there may not be familiar with sales tax or even use tax, but in the United States, just because you don't pay sales tax on an invoice doesn't mean you don't owe it. So, and larger companies, that tend to get invoices from smaller companies without sales tax, they will self-assess it and remit it to the state. So those are two ways that we'll work through liability mitigation and try to figure out. But at the end of the day, if you do owe tax, and it is for a period of time in 3 to 5 years, every single state has at least a voluntary disclosure agreement program or VDA program. This allows us to go back to the state. Don't forget, the state doesn't know who you are yet. So we go back generally anonymously. Some states don't allow it anymore. Most states still do. And we say, Pennsylvania, we have a taxpayer who just realized they haven't collected sales tax in years. So here's the deal. You don't know who they are, and we're not going to tell you yet. But if you agree to two things, agree number one, that you'll only go back 3 years. That's generally the minimum, the most benefit we can get. So let's say you owe tax for 5 years. We can, number one, cut it in half by the agreement. Also, you're not going to hit us with any penalties. Finally, there could also be a benefit on reduced interest. Interest is generally statutory. So whenever we have a client that does owe money, we can't get interest to zero, but many times we can get it statutorily reduced. So voluntary disclosure programs are great ways for companies to say, okay, I'm not in total trouble here. I can come back. I can handle it. We can collect that ourselves. We'll do some liability mitigation and handle it that way. One other opportunity we may have is called tax amnesty. You may have heard of this word tax amnesty before. Tax amnesty programs are not very common, though. At any point in time, maybe 1 or 2 states have a tax amnesty program going on. But we'll look for every opportunity to reduce your liability, reduce your penalties and taxes, and make sure you're paying the minimum amount due.
Now, do the states talk to each other? So, for example, anonymously, I'm going to Pennsylvania, right? They agree, blah, blah, blah. Can we put in a phrase that says, even if you find out we owe tax, you can't tell anybody else that we owe tax to you?
Yeah, it's a great question. Listen, I've been doing this for 25 years. Officially on the record, states say they do not talk to each other. But, I'll give you an example. The states do force the arms of their large businesses in their state to give them information. So 6 years ago, the big story is that Amazon had to give all of their online resellers names, IDs, phone numbers, email addresses to the state of California, because of this inventory issue I was telling you about. So before Amazon agreed to collect sales tax for California, there were years, just 5 years ago, where Amazon wasn't collecting sales tax for most of its vendors. And California basically forced Amazon's hand to say, hey, give us a list of everyone. And I think hundreds of thousands of letters went out to taxpayers all across the U.S. There were people in Massachusetts calling me, hey, I just got a letter from California. What the heck do they want? Yeah. And I'm like, they want their tax. You've been storing inventory in California. But Chris, I've only been storing $10,000 of inventory. All right, but how many sales did you have there? Well, we had 100,000. Well, that's $7,000 in tax that you owe California. And there was no way around it. So that's an example how the states, there's no evidence that the states share information, but the states use any resource possible. The number one way a state will catch you for under collecting or underpaying your tax is during a current audit. okay, if they have big invoices from you and they say, oh, okay, this vendor hasn't collected sales, they're not charging sales tax. Let me write down that vendor's name. Let me go back to the office and see, oh, that company's not even registered for sales tax. Oh, look, they're not registered for income tax either. And they send a letter out saying, hey, we'd like to do an income tax and sales tax audit for you. We noticed that you were selling $250,000 of, property to this company. And, when do you want us to come and hang out in your offices for 6 months?
For you. Uh-huh.
Yeah. So they'll use many different resources to find it. And the greatest resource is through audits that they currently do.
Another
to get
connected
names. Yeah. Yeah, great question.
Well, and so, okay, so we've done all the mitigation. We've tried amnesty program. I mean, like, we've done all the things that we can possibly do. And I owe $250,000. I don't have $250,000. Are there payment plans? Like, what happens?
Yep. Most states have payment plans, unless you have a history of not paying other taxes.
So if you've been bitten before and then they're not happy with you, okay.
Yeah, we can go back once, twice. We've gotten payment plans a couple times. We just basically negotiate payment plans for 27 gyms in New York City that fell on hard times, and sales tax they weren't able to remit for about 3 months. And we just worked out payment plans with most of the time we got penalties remitted. Let me just share this with you regarding sales tax. There's 2 ways you get in trouble with sales tax. Number 1, not collecting it when you should have. Number 2, the worst is not remitting it when you collected it. That's like the number 1 bad thing to do, everybody out there today. If you have a retail business and you've been collecting it and not remitting it, it's very difficult for us to get penalties abated. Sales tax and payroll tax in the United States are called trustee taxes. So what happens is that you're collecting these taxes on behalf of the state. It's not like income tax. Income tax is money that at the end of the year, Shauna crunches the numbers and says, you owe this money. And that's actually your liability. It's the business's liability. Sales tax and payroll taxes, you're collecting this money. It was the state's money to begin with, and you're collecting it on their behalf. So when you collect money on a sales transaction or a payroll transaction from your employer, from your employee, and don't give it to the state, that's a really big no-no. States really frown upon that. I forgot the guy's name from Tyco years ago that went to jail for unpaid sales tax on art, but we have a list. Actually, we thought about, it's funny. I talked to my team last year about starting a blog about people that went to jail.
I was going to say top 10 dirty dozen.
Right,
yeah.
Exactly.
Oh my goodness.
Plenty of it, but we don't want to let people know that we're out there to do that to them. We're your advocate, right? We're not sitting here looking to send anyone to jail, but we just want to let you know.
It's good examples.
Though. Yeah, it's
this
important
is,
to know. We've got owners and pizza parlors in New Jersey that have gone to jail for 6 months because of this. So unfortunately, we've seen a lot of cases where people that have collected the tax and not remitted it. If you don't know about it and that's honest and true, you're not. Don't worry about it. You're good. Right. But if you've collected it and you purposely haven't remitted it, the states really frown on that. And so those are 2 different standards you need to look at. But going back to payment plans, yes, payment plans are very common, generally 10, 25% down, depending on, you have to prove financial need, obviously. One of the other things about payment plans, since sales tax connects back to the officers and there's personal liability on sales tax, I don't know if I said that, by the way, but income tax, no personal liability to the officer. Payroll and sales tax, personal liability to the officer. So, generally there's payment plans there, but just keep.
But I've seen them. I mean, of course, I see more of the payroll tax side, right? You're on the sales tax side.
Yep.
I've seen when they actually attach it to the officer. Now, you're saying officer. It can be owner of a company, just so all our listeners are clear. Owner, shareholder, partner, could be the bookkeeper.
Tax preparer, absolutely.
Tax preparer could be absolutely anyone that is related in any way to the finances of the company, right? Or management.
I've seen bookkeepers go down. Bookkeepers beware. They think that they're all good. Well, I haven't signed anything. Okay, but did you go in and file 0 tax returns on the online platform? Well, yeah, but the owner told me to file 0. Okay, but did you know
click the button?
Sales tax? Well, I did know. You're on the hook. Right. So, so just be careful. I generally like to stay away from clients. We take an occasional client on that's a bad client, but if I get a sense that they've been a bad client for a while, there's another group I send them to, which is our tax controversy group.
Between you and I, we're the above board, keeping everybody crossing T's, dotting I's.
Yeah, there's someone to help those people, but we want people
no
that
tax
want to be, we want clients that want to be good taxpayers. And again, we want to be your advocates. So we want to be able to fight for you, knowing that you're making a good effort to do the right thing. So.
Absolutely. No tax fraudsters in this.
No, we're not trying it. Yeah, we're not there.
No. I love it. Well, let's see. Okay, what else? So one of the other most popular questions that I've received, right? And you brought it up earlier, is about the 1099s, right? So at the federal level, right, for income tax purposes, I don't have to give a 1099 to anybody that made less than $600, right? They were casual labor. They're kind of on the side, whatever.
Yep.
Are there any kind of limits when it comes to 1099s?
So there's not limits to 1099s, but most states, when it comes to contractors for income tax purposes, states have very specific thresholds at what is defined as doing business. Now, you may say, Chris, you used the word nexus 1,000 times, and all of a sudden you're using this word doing business. Well, they're kind of used interchangeably. And for whatever reason, years ago, states have taken in their legislature and in their legislation and used this term doing business. So in general, if you have more than $50,000 of either employee W-2 or 1099 contractor amounts in a state, that begins the close look and examination of, all right, do I need to pay income tax? Do I need to think about sales tax in that state? So although there's no fixed rule to 1099 contractors, there is a general rule around $50,000 in payroll, $50,000 in sales. This is outside of like economic nexus for sales tax. Now we're talking a little bit more about income tax, and then sometimes 50,000 in property that you may owe. So there are some general, guidelines we look at that are kind of catch-all areas that we say, all right, here's the numbers where we need to start getting worried. So.
And there we go. Okay. Well, and that's a good place for people to start, because we've talked about 100,000, we've talked about 50,000. So guys, and then all the specialty cases, right? So, the easiest way, my understanding, and what we've always done with your firm, right, Chris, is that if we're not sure in any way, if we even have a hint of a doubt, of a thought that maybe this applies, reach out to you and your team, right? Yeah. So how does it work working with you and your team? Is there like a free evaluation, or what
Sure. Yes, we generally give you a 30-minute discussion where we ask questions about the company. We give you a really high level. Listen, if we're talking to you for 30 minutes, we know there's nothing going on there, we're fine. We'll let you know that. And even, what I always say to people, though, I have that conversation. I'm like, okay, my God, I don't think you have any other filings. But some people say to us, hey, Chris, can you put that in writing? Obviously, we need the charge to put that in writing. So what typically happens is we have a conversation with them. We say, okay, you're going to have some serious nexus issues. And then we give them an idea of a budget, what that budget could be for a sales tax nexus. It is based on volume of business, how many states you're doing business in, how many employees you have, what your contracts and products and services are. I really hate to give guidelines, but it can be anywhere. I'll throw a number out there of anywhere between $3,000 to $10,000 for a nexus study.
I was about to say, are we talking 30, 100, 200,000?
No, yeah, we're talking probably $3,000 to $10,000 to have a really good idea. And again, it kind of depends on what you want to do. And I would say about 10% or 20% of our clients, after that 30-minute discussion, we can give them somewhat level of comfort that they've got a clean bill of health and just come back and check with the doctor next year. So
love it. A 30-minute check to make sure, and I can't say make sure because of course it's not in writing without paying a fee. And as y'all know, right, listeners, right, this is part of the aggression level, right? We've talked about 0 to 10 on that scale, 0 meaning the IRS, in this case, the state governments never call you never ever, right? 10 meaning everybody's going to jail. Would you say 6 months for the pizza parlor dude? Okay. Where do you want to sit on this scale? If you are closer to that 0, 2, 3, 4, pay the money, get the report in writing from the professional that says, we've looked at it, we've checked it, you're good, right? If you're more at the 8, 9, 10, yeah, maybe the 30 minutes is okay, right? But this is your call as a business.
Yeah, it's funny, Shauna. Every business has a business insurance policy, right? you're not even allowed to do business in certain situations. Certain companies want you to have a certain amount of liability insurance. What I tell people, these Nexus studies are effectively a form of insurance policy for you. You get a document, you put it in the file. I'll tell you this, I've been doing this for 25 years. If you ever, even if there's a mistake made or you don't give us the information that we need or the law changes, if you can show some good faith effort that you've made it, that is all the difference to the states. I've never had a situation where someone that did a Nexus study had a liability or even didn't deal with it for a year later. As long as they've made an attempt to handle it, the states are reasonable. And there's usually a reasonable means to an end to try to get everybody comfortable with, what's owed and how that gets resolved. So,
yeah. Love it. Well, Chris, what have we not covered? Are there any super common questions? Anything else that people should know?
Well, let me touch base a little bit. We talked a lot about sales tax, and I want to talk a little bit about income tax because when you sell, you may hear a common phrase from your accountant or for someone about this public law 86-272. So I do want to give you a little education to your listeners today on that. So many, many years ago, the federal government said, hey, listen, we can't have every state making up crazy rules and assessing income tax to any company, right? Because then every one of Shauna's clients would have income tax filings in all 50
states. Yeah.
And we can't handle that. So let's set some standard guidelines about when states can apply an income tax to other companies or individuals. These rules, by the way, apply to individuals for partnerships. And that concept was 86-272. And what that basically says is that if you sell tangible personal property, now this rule was created over 40 years ago. So there were no digital products back then, and the service industry was pretty small. So that's why they used tangible personal property. They were trying to prevent companies from, paying taxes for shipping items all over the place and having to follow these income tax returns. So if you sell tangible personal property into a state, you have to have an employee in that state that is operating within the business. Basically, you have to have physical presence in order for that state to apply their income tax with you. So even if you have an employee that's only a salesperson, okay, you can even have an employee that's a salesperson in the state, okay, and you sell tangible personal property remotely, we have this special rule which allows us to say, okay, you don't have to file an income tax return in the state. Now, that rule has nothing to do with sales tax. I have clients saying this to me all the time. Chris, why do I have to file sales tax in, 40 states, but I'm only filing 4 income tax returns? Because you're protected by this income tax rule. But it doesn't protect you for services. Software companies are generally service providers. Digital product companies are generally service providers and not defined as TPP. So if you sell TPP, tangible personal property, anything physical, you're going to have a little bit of leeway in doing a Nexus analysis. But if you're a software company and your accountant or someone says, hey, you don't have to file because of 86-272, that is incorrect. And we've seen a lot of people get in trouble thinking they're protected from an income tax standpoint by this. And then finally, the states aren't stupid, right? They're always looking for ways to get their hand in your pocket. So what they started doing about 10 years, and they said, okay, this 86-272 rule is good for income taxes. Let's get rid of our income tax and let's create a gross receipts tax.
Yay!
And so, yeah, states like Washington said, okay, we're not going to tax you on 7% of your net income. We're going to tax you on 1.25% of your gross income.
Gross.
And that's the Washington B&O tax. So states like Ohio, states like Washington, states like Hawaii, they created these gross receipts taxes that have dollar thresholds. Go figure, 100,000 in Washington, 100,000 in actually most of these states. Now they've eventually aligned with the sales tax. And so, even if your CPA is saying, hey, you don't have income tax filings because you're TPP and 86-272, you could say, hey, what about, I heard that there's these gross receipts taxes. I just want to make sure that we're not missing anything. So that's a little bit I just want to share with people on the income tax side. And income tax and sales tax can be drastically different depending on the type of company and industry that you're in.
And guys, there's lots of different names for these taxes, right? Mm-hmm. So sometimes you're going to hear gross receipts tax. Sometimes it's called an excise tax. Sometimes it's called an income tax, right? It's all another form of tax, right? So even on the income tax side, and you guys know that Tax Goddess does income tax. Talk to the expert, okay? This is why you need, and why we call it a Nexus study in general. There's 50 million things that could apply to your business. You'd really like to know, as a good business owner who's trying to protect your business and do it right, you really want to know, well, out of the 50 million things, which are the 4 that are going to bite me, that I need to make sure that I'm handling and I'm on top of and I'm filing and paying and doing whatever I'm supposed to do. Especially if, side note, if you're supposed to be collecting it from your clients, if you don't collect it, you're not going to go back after your clients to go get that money. You get to pay it out of your profits. So you better know in advance if you're supposed to be collecting it from people. So
100%. Yep. Those are all great points. I mean, I think at the end of the day, a little diligence goes a long way. Clients love to get educated, by the way. If you're a CPA listening to this, by the way, don't be afraid of this. Don't feel like, well, my client thinks I should know this. I'm telling you now, most CPAs don't know it.
Yes.
And so
and it's okay to tell your client that you don't.
Right.
Tell them I have an expert partner. Go
exactly.
work with Chris.
I encourage CPAs to use this as almost another stream of revenue. By the way, again, we're the client advocate, but if there's more returns they need to do, that is some more revenue to you. So even if you're a CPA thinking about this, what a great way to provide value to the client, lower mitigate risk, and expand the business a little bit. So,
and be the true fiduciary that you're supposed to be, which 100%. Is I don't know all the things. That's why we call experts, right? Yeah. So yeah, love it, Chris, love it. Okay, so what else? Any other big major topics?
No, I don't think so. I mean, some people ask, how often do I perform this study? I would suggest once a year. On fast growing companies on the sales tax side, if you're growing from, $1 million to 5 million, I think this year you should probably do your studies maybe quarterly. Again, sales tax, you don't want that to come out of your pocket. That's money your client should be paying you. So I would say this general theory is that when it comes to sales tax, be more diligent, do it more often. Income tax, you could definitely get away with once a year. You don't need to do it more than that. But sales tax is more timely because of that. So I think that's the last thing I would kind of leave everybody with in that way. And, like I said, take advantage of the free 30-minute discussion. If nothing else, you're going to walk away and you may know a lot more about your business and in terms of, these other risks that could have been out there. So, finally, let me say this other thing. Actually, I just thought about it. If you're thinking about selling your business, right? We see this all the time. You may want to do a little checkup. If you're selling your business and someone big is on the other side, they're going to have a team of people like me digging into your numbers.
Making sure you paid everything you're supposed to pay. Liabilities, what else is in there?
Yeah, 100%. So I think as I just think about a few other things, that's some other thing. If you're on the verge of selling your company, you're thinking about selling it, have somebody come in and look at it beforehand because we can clean up that mess and, possibly increase your valuation in that business. So I think those are some of the last thoughts I had that I wanted to share with everybody today.
I love it. Chris, thank you so much for sharing your expertise. You are a wealth of knowledge. I feel like I should change your title to Chris Vignon, Salt God. I don't know. Anyway, you always have so much knowledge to share. So anyone listening, please reach out. I've posted both of the websites for Tax Goddess, of course, and PMBA, which is Chris's company, down here below. So you can go to the websites, book that free 30-minute consultation call. Chris and his team are amazing and excellent, so they will take very good care of you. And of course, if you have any questions, don't hesitate to reach out to us at taxgoddess.com. Happy to help in any way. Chris, thank you so much for your time today.
Thank you, Shauna. Always a pleasure.
Everybody have a wonderful day. We'll talk to you later.